Hi everyone, welcome to First Phase Media. This is Mark, and today we'll be discussing Grounded Lithium, a lithium company focused on supplying lithium into the rapidly developing electricity-powered economy. And for talking about this company, we'll be with Greg Phaneuf, CFO of the company. How are you doing, Greg?
Mark, I'm doing excellent here in sunny Alberta, Calgary, Alberta, our headquarters.
Okay, so talking about Alberta, could you introduce Grounded Lithium more generally?
Right. Grounded Lithium is a relatively new entrant into the very much budding lithium from brine industry. Myself and Greg Smith, another Greg in the company, we founded the company a little over 2 years ago, had it as a concept about 3 years ago. And we've been on a very fast trajectory ever since then. We've tied up a lot of land in our chosen first area, which is near Kindersley, Saskatchewan. I'm headquartered in Calgary, Alberta, but our assets are in Saskatchewan. I'm sure we'll talk about Saskatchewan as we go through this, Mark. But yeah, we're in a fast track, dominant land position with the vision of becoming an environmentally sound, leading producer of lithium in Canada. That's part of our vision statement. It's part of our DNA, and we're working towards that vision each and every day.
Okay, and talking about Saskatchewan, could you tell us what are the benefits of mining lithium there?
Right. Just one point we'd like to make here is that we're not actually a mining company. Lithium from brine really is, in many respects, a hybrid between the oil and gas sector, which is where all of us have had decades of experience in, and the mining sector. Certainly, it's a mineral, so there's a mining context around it, but the actual extraction and process by which lithium from brine companies get ultimately to production or to a product is not necessarily a mine. It's oil and gas practices to some extent. We'll go through this, and there's plenty of materials on our website that show how we drilled wells. It's basically a drilling rig, tapping into a certain horizon. You're producing the brine and processing the brine into ultimately battery grade lithium. So it's not necessarily a mine operation. It's very much a hybrid. And we try to, when we have these kinds of forums, to educate the investors that really it's like I said, a hybrid. And if you have a lot of expertise in oil and gas, which all of our team members do, it's certainly transferable and arguably a layup in terms of skills in that regard. You asked the question, why Saskatchewan? Saskatchewan is a province very well known by the mining and investment community. It's ranked third on the Fraser Institute as a place to do business. And that's owed to its fast tracking on permitting, its openness to embrace resource development. The tax rate there is favorable. They have a low royalty structure when you're starting up a new business. And a lot of us are actually from Saskatchewan originally, believe it or not. But what we like to say is that we didn't choose Saskatchewan because I'm from Saskatoon and others are from Saskatchewan. We chose Saskatchewan because this company is very much rooted in resource development. And resource development all ends with and starts with the rock, the reservoir. And we have a great team of very astute geologists, geophysicists, and engineers. And when we started this company 2.5 years ago in concept, incorporated in October of 2020, Mark, we spent months and months and months looking to see where's the best place to start a lithium from brine business. And the rock, the resource took us to Saskatchewan. So it's fortuitous that we're there. Certainly we would take advantage of all the things I mentioned, but Saskatchewan's a great place to do business, and we look forward to developing our assets there.
Okay, so now let's dive more into your project. So could you tell us what is your Kindersley Lithium project, and moreover also what extraction process you're using there?
Right. I mentioned before we have a dominant land position. In our chosen area, we're about 20 minutes north of Kindersley, Saskatchewan. That's a town with a population of roughly 5,000 people, all kinds of services that have serviced the oil and gas sector for decades. We get to take advantage of those services ourselves. Our dominant land position currently sits at about 300 sections. That's about 300 square miles, or in terms of acres, 192,000 acres. If you want to look at hectares, that's about 79,000 hectares, depending on which ratio you want to look at. 300 sections, that's a lot of land to develop not only one project, but multiple projects in our mind. We can get into some of the the levers of how the economics work. But we have a great land position that we've accumulated through time. We put up our own money initially to buy land ourselves, like Founders Capital. We've gone public, raised money twice on two separate public rounds that we'll come to later, I'm sure, in the questions in terms of our capital structure. But well capitalized and now have 300 sections. We have an inferred resource report as prepared by Sproul Associates Limited, a leading reservoir resource assessment evaluator. That's at 3.7 million tons of LCE, lithium carbon equivalent. That's a respectable number. We're quite proud of that. To my point earlier about chasing the rock, making sure the rock was good, we were very targeted in what we chose. We weren't just out there to have a massive land grab and lots of yellow on the map. We wanted to be very conscious and rigorous, as we say, in terms of picking what lands make the most sense. So on those lands, we have 3.7 million tons. You mentioned DLE or technology. Lithium from brine, I think, is set to be a significant industry in Canada, let alone around the world. And one of the things that the lithium from brine industry needs is the technology. So our technology that we're pursuing is direct lithium extraction, or DLE. It goes back, Mark, to another fundamental tenet of our business. We are very well accomplished in resource development. We know enough about technology to be dangerous, but we are not scientists. And both Greg and I would tell you that in previous oil and gas companies where we've had technology arms, those companies end up spending a lot of capital towards chasing their own technologies. And that could be very advantageous, but it also at the same time could be a drain in terms of capital. So when Greg and I started this company, we said, we want to stick to what we're good at. We're good at resource development. We'll let others develop the technology. So where I'm going with this is we engaged Hatch Engineering, or Hatch Ltd, a leading engineering firm when it comes to extractive technologies and specifically lithium. And we engaged them to help select our chosen technology. So this is, a public record. We engaged them back in October. We're narrowing our first kind of cut to 4 technologies. We're in the process right now, as we speak, of doing assessments to narrow that down to 2. And of the 2, then we'll ship off brine that we already have in secure storage from our first well that we drilled last summer. We'll provide sufficient samples to the 2 top technologies. We'll pick one, and then that DLE technology will be our chosen technology as we build our commercial project. So DLE is important. There are many companies in our space, esteemed companies, ones that are arguably ahead of us in terms of development, that have chosen DLE themselves. We're certainly cheering for them because DLE is potentially a disruptive technology. It could really, not to be kind of hyperbolic here, but blow the roof off lithium from brine industry. And if one company in lithium from brine proves it, then arguably we all kind of bask in that glory. So we're cheering for everyone. But in the meantime, we're doing our own assessment through Hatch.
Okay, so what's the timeline basically for choosing the DLE technology? And once you have chosen that, could you say, what are going to be the next steps to go further into the project?
Great question. So our engagement with Hatch is ongoing as we speak. We hope to narrow down that 4 to 2 within the next month or 2. And then from there, we would narrow down that 2 to 1. We're kind of windowing Q2 to have that assessment finished. In parallel with that, Mark, we're also preparing our preliminary economic assessment, or the PEA, which is pretty important in terms of validating to the marketplace the economics of our project. That PEA will encompass the chosen technology, but it can run in parallel because a lot of the assessments of facilities and whatnot can happen irrespective of the chosen technology. So like, your sizing of vessels, pipelines, number of wells, all those kinds of things can be done as part of your economic assessment while you're choosing the technology. That PEA, important. We've seen other companies ahead of us publish their PEAs successfully. We would hope to have that done by the end of Q2 as well. And then from there, once we have a PEA, in our presentation, we have a Gantt chart of 2023, early 2024 timeframes. We'd like to kind of move the PEA into developing a demonstration facility in the field. And then that's where it gets exciting, because if you can prove that it works on a demonstration scale, just based on our backgrounds in oil and gas and resource development, then there is a bit of a leap, if you want to call it that, or a progression, by a better choice of words, a progression to an actual full-scale commercial facility, which we would see ourselves being commercial in the 2026 timeframe.
Okay. And regarding everything you mentioned, could we say your company is ESG concerned?
100%. Another great question. That's one of the major benefits of a lithium from brine industry using DLE. Current sources of supply around the globe for lithium are primarily two. There's the open pit spodumene mines, which are dominant in Australia, and the other one are the salars, or the evapo concentration ponds, in Latin America. Both have been instrumental in providing supply currently, but each of those has its own cons when it comes to environmentalism, sustainability, etc. Our operation is very small footprint. There's not a big, massive, open pit mine. There's not major salars or evapo concentration ponds. We literally have, a postage stamp of a drill rig with a pump, down the hole. It pumps the water, goes to a facility, and the water literally never sees the light of day. It's pumped up, processed, and pumped right back down, disposed of into likely a different reservoir that would be able to contain all that lithium voided brine. So that's got a huge environmental aspect in terms of carbon footprint, surface footprint. Again, I think to my comment earlier that if DLE technology gets proven or something to that equivalent, then the lithium from brine industry is set to be a major factor in lithium supply globally.
Okay, so now let's move to another subject and let's get to know a little bit more about you and your team. Could you tell us a little bit about your background and how you had the idea of Grounded Lithium? And then,
Right.
if you could discuss your team was part of the project.
Sure. So our CEO is another Greg. We have two Gregs here. Just to keep it simple, we have actually two Gregs and two Dales. So we keep things here simple at Grounded. But Greg and I have known each other for about 4 years or so. Both experienced in the oil and gas sector, and everyone kind of knows of each other. A very small circle in some respects. So Greg and I were actually looking at 4 or 5 years ago an oil and gas opportunity that came and went. We liked kind of how we interacted together, very much aligned on values, vision, and together, Greg's idea at first for sure, but he started this lithium idea, brought me into it, and we thought this would be a fantastic business plan, a way to create all kinds of shareholder value. So around the two of us, we've now surrounded us with some other expertise. On our website, there's a complete listing of our team. There's 6 main people with a couple of consultants on the side just to kind of mitigate G&A. We also have a board of directors that are very knowledgeable, again, in resource development. John Wright chairs our board, and he's surrounded by other 2 independents, being Dave Anthony and Mark McMurray. Very well experienced, and they give us a lot of insight and wisdom. So we have a great team, a team that's done this before in terms of resource development. And that's one of our key factors, we believe, is a proven team.
Okay. So now let's move to another subject, the one you were talking about previously, the financial one. Could you tell us, what is your cash position, how you guys are currently using it, and also you had a recent financing, if you could give some news about it. Sure.
So we're a public company now. We trade on both the TSX Venture and the OTCQB. To answer your first question, their cash position, what we've disclosed in our presentation is $3 million Canadian. That largely came from our most recent financing, which you alluded to. We did a special warrant financing, which closed in November of last year, and we cleared those securities through the filing of a short form prospectus early here in January, making those securities free trading. We have no debt, very clean balance sheet. That $3 million gives us enough run rate to take us clearly into Q2, beginning of Q3, which achieves a number of catalysts for us. I mentioned earlier about selection of the DLE technology, the creation of a PEA. Those will be funded by our working capital reserves at present. If we get into the construction or the design initially, and ultimately the construction of a demonstration facility, that's going to require some more capital. But present, we're well capitalized, well funded to maintain our current pace of development. I'd also offer, Mark, that there's lots of communications being done by the federal governments, both in Canada and the United States. And we certainly are keeping an eye on our ability to make applications to seek funding in both countries. The US in particular, under its Inflation Reduction Act and some of the subsets that fall under that, does consider Canada to be a domestic source of supply. And it's keenly important for the US to, in this deglobalization effort that we're all in as citizens of the globe, it's keenly important for the US to find more closer sources of supply for its lithium needs. Right now, they're taking them from primarily China. And that has all kinds of political and economic impact. So the US is very adamant on finding sources of supply closer to home. And Saskatchewan, another good point to Saskatchewan, all access to paved roads, rail, natural gas pipelines, power facilities. We're literally a straight shot to our friends in the United States. And moreover, the Canadian government, I should mention them, give them a plug too. Like they just announced a $3.7 or $3.8 billion critical minerals strategy that, again, we're watching, and we're making an application at the appropriate time to seek some government financing there too.
Okay. So you talked about the balance sheet. So what about the share structure? Could you describe it?
Mm-hmm. Fairly simple. Like to keep things simple here at Grounded. Like we have, two guys who've got the name of Greg and two guys with the name of Dale. So we're pretty simple. I'm being facetious. The capital structure has been designed from day one to be conducive for future rounds of growth. We've raised $10 million to date. Some of that's gone into drilling activities. Some of that's gone into preparation of reports. It's gone to build the value. Our current share structure with the clearing of the special warrants now sits at roughly 69 million shares with a bunch of dilutives. The warrants themselves and the special warrant offering, fully diluted, we're at 90 million. Management owns 14% of the basic outstanding shares. We have about 17% held by institutions, which we're proud of too, in terms of having some institutional following into our very early story. And the balance is held by high net worth and just generally retail. So it's a decent composition of shareholders. As we grow, we're, give or take a 21 million market cap company. We'd like to see ourselves grow and evolve and move that institutional wedge to be a higher percentage of the overall ownership. But capital structure is simple, and looking for potential ways to raise money down the road.
Now let's move toward the conclusion. To summarize everything, what are the company's highlights and strengths?
Yeah, when I do this, I like to kind of say to people, there's three things you should remember about Grounded. One is the macro tone, obviously. The lithium and more critical minerals movement, energy transition shift around the globe is real. And I think investors should, at least as a certain percentage of their portfolio, think about placing different investments into different stages of companies in that battery supply chain. Grounded happens to be an upstream, right at the front end. And I think that, from an investor's point of view, given the other two factors that I'll mention, one being quality of the resource. Again, I made the point that in resource development, it's all about the reservoir or the rock. If you have, subpar rock, you're going to have a subpar project. And we spent considerable time assessing where is the best quality rock. And again, brought us to Kindersley, Saskatchewan. So the second point is we have a high quality resource that is very economic, even under prices far below what we see current lithium prices trading at. And the third point is the team. As an investor, you always want to invest in the team. If you have a good quality asset and a good quality team, chances are you have a high propensity for success if certain macro factors work in your favor, which, to my comment earlier, the world shift to battery supply or electrification of the world, it's a global movement. So you're sitting in a good spot as an investor. If you put money into that space, you're sitting in a good spot as an investor, selfishly, by putting your money into Grounded.
Okay.
We're a relatively inexpensive company with lots of torque to our investment.
And so what could investors expect in the short and midterm?
Yeah, you'll see some news flow on, as I mentioned earlier, you'll see some news flow regarding technology selection. You'll see some news flow regarding, the creation or the completion of a preliminary economic assessment. You'll see some news flow regarding development plans of our area. We've done a lot of work in terms of fluid dynamics and fluid modeling, because again, keep in mind, this is a subsurface reservoir, which our team has got lots of experience in. We think that we're kind of pushing the envelope there in terms of how far that's been analyzed and developed. So you'll see some news flow regarding our development plan. You'll see likely in the coming months moving some of our inferred resource to indicated as we get more of a confirmation or more of a comfort factor on the quality of the resource. And then moreover, I guess towards the end of the year, you'll see some announcements towards, this demonstration facility that I mentioned earlier. Subject to financing and constraints there, we've been moving quickly to build a demonstration facility to prove out the commerciality. So there's been lots of news flow already. 2022 was a very active year for ourselves, and we see no different to that in 2023.
And if we take a broader look, let's say a 5-year span, where would you see the company at?
Yeah, so as we like to say, we're impatient. In the resource development business, we'd like to see stuff get built and ultimately get to production. It's unlike oil and gas, where again, we're all rooted from. In oil and gas, you drill a well, you get production, you get cash flow right away. In this operation, we're years away from drilling wells, building a facility, bringing it online, commissioning it, and ultimately selling your production. I mentioned earlier 2026. That's kind of our window, 2026, May 2027 early, where we get into commercial production. And I should mention to the viewers that we're looking at doing this in 2 10,000 ton per year trains or phases. And that has some advantages in terms of economies of scale, getting the cash flow off the first phase to pay for the second one, so on and so forth. So I think in 5 years, to put a point on your question, Mark, that we would see ourselves in production and beginning to throw off cash flows that could be used then to fund the next phase, or consider some sort of a dividend or a yield to shareholders. We have lots of different levers and degrees we can pull there, but at current prices and what we're estimating as the costs, and I think every company would tell you this, in lithium from Brian, there's lots of economic rent, as you call it, that can go around to make shareholders very happy.
Okay, well, that's it for me. Thank you a lot, Greg, for your time. And I'm looking forward to hearing more news from Grounded Lithium.
Appreciate your questions, Mark, and have a good day.